What's up, guys? I'm nobody special, and Turkish President Erdogan is putting on a clinic in how to destroy an otherwise prosperous economy. Right now, inflation in Turkey is at 47% annually. The country's power grid is on the brink because of rising fuel prices and uncertain deliveries from Iran. That's forcing Turkey to cut off power to major industrial users, which is crushing the country's manufacturing base and killing their exports. And the country is fast running out of dollars and euros that it's using to prop up its own currency. And now the country is forcing its own companies and citizens to surrender their dollars and euros in order to prop up the lira further. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm nobody special. And the economic situation in Turkey is spiraling downward fast. Right now, inflation is at 47% annually in that country. They're having trouble sustaining their power grid. They're forcing their manufacturers to shut down production in order to save power and keep the grid online. Of course, that is killing Turkey's manufacturing base. It's hurting their exports, and this comes at a time when they desperately need dollars and euros in order to continue propping up the lira. Meanwhile, President Erdogan insists that cutting interest rates is the way you fight inflation. Here's a hint: it's not. This has resulted in the term Erdoganomic, which is basically a crash course on how to destroy an otherwise prosperous economy. And let's face it, folks, right now Turkey's economic prospects are about as bleak as my hopes that Star Wars will ever be good again. Now, before we get into these articles, folks, won't you stay a while? Consider subscribing to my channel. Don't forget, hit that like button. I'd be forever in your debt. And now it is that wonderful time when we shrink my big, fat melon of a head. And let's take a look at some of this nonsense going on in Turkey. And here we have in Bloomberg, this is dated yesterday, boosting lira center stage as Turkey's central bank reviews policy. Governor Kavcıoğlu, and if you haven't been keeping track, he's like the fifth or sixth guy to run Turkey's central bank in about a year and a half because they just keep dropping like flies because it's hard to find somebody that's going to do what Erdogan wants because he's nuts. Governor Kavcıoğlu elaborates on central bank policy review. Kavcıoğlu lifts inflation expectations after 2021 lira rout. And again, the 2021 lira route, that is what happens when you lower interest rates to fight inflation. It does not work. Turkey's central bank said supporting the lira is a key objective of its ongoing policy review after the currency's collapse last year pushed consumer price growth to its highest in 2 decades. The monetary authority will keep shaping its policy to encourage investors to convert their savings from foreign currencies to lira. To encourage investors. We'll talk more about that in a minute. Governor Kavcıoğlu said Thursday as he unveiled the year's first quarterly inflation report, which was not good, folks. The de-dollarization of Turkey's financial system will allow policymakers to curb price growth, which will end the year at 23.2%, according to the report, up from the bank's October forecast of 11.8%. And folks, the inflation is already double that forecast at 47%. And I also want to draw your attention to the fact that they're talking about the de-dollarization of Turkey's financial system will allow policymakers to curb price growth. And that is fancy economic speak for Turkey is frantically dumping its dollars and euros, trading them for lira in a desperate effort to prop up the value of the lira. Okay, so they are artificially propping up the value of their currency by buying it, selling off all of their dollars and the euros. The problem is they're almost out of dollars and euros, so they can't keep it up. So while they say the de-dollarization, which makes it sound like Turkey is trying to gain its independence from the United States, what they're really saying is they're desperately selling their dollars to buy lira to try to stop the bleeding of their own currency, and it is not working. And we can see that in this next article here, dated today in Reuters. Turkish inflation seen soaring to a 20-year high of nearly 47% in January. Turkey's annual inflation rate is seen rising to around 47% in January, the highest in nearly 20 years, a Reuters poll showed on Friday after the currency crisis last month led to steep price hikes across the board. Turkey began the year with a series of price hikes ranging from gas and electricity to road tolls and bus fares, mainly due to a currency crisis that saw the lira lose 44% of its value against the dollar in 2021. The monthly minimum wage was also hiked 50% for 2022. The impact of those price hikes is expected to have pushed inflation even higher in January after it soared 36% in December and is seen rising further in coming months. The currency crisis was sparked as the central bank, under pressure from President Erdogan, slashed its policy rate by 500 basis points to 14% since September, despite rising inflation. And again, folks, that is pouring gasoline on an economic fire. When you lower interest rates to fight inflation, you create more inflation. I don't know where Erdogan got his economics background from, but he may want to dust off that book and read that chapter again, because that's not how this works. That's not how any of this works. The cuts were part of Erdogan's new economic plan that prioritizes production, exports, employment, and low rates. The central bank says the strategy will help Turkey's chronic currency account deficits turn a surplus, bringing price stability. And folks, so far, everything in that last paragraph has been the opposite. They were going to prioritize production and exports. We'll talk about those in a minute. Employment and low rates, And the central bank says the strategy will help Turkey's chronic currency account deficits. Well, folks, they are just about out of all of their foreign currency because they sold it all trying to prop up the lira. But first, let's talk about that first part of this paragraph, the exports and the production, because we saw this. Some Turkish manufacturers paused production after Iran gas supplies disrupted. Some Turkish manufacturing companies have halted production temporarily after Iran cut gas flows last week for up to 10 days due to a technical problem. Turkey is almost fully dependent on imported gas from Russia, Azerbaijan, and Iran, which suspended gas flows to the country last Thursday, saying there was a technical fault at a pressure boosting station in Turkey. Turkish authorities have announced planned electricity and natural gas cuts to large consumers in industrial zones and electricity generating power plants due to limited supply from Iran. Food producers say a planned 72-hour electricity cut in industrial zones would risk food safety and pose a threat to goods in storage units. Cold storage units need electricity. Energy limitations pose a serious risk to food safety, said the Organic Producers and Manufacturers Union, requesting an exemption from the gas and electricity cuts. Iran provided 16% of Turkey's natural gas needs in the first 10 months of 2021, according to the latest official data. Energy prices have risen sharply in Turkey, driven by global increases and a 44% decline in the lira's value against the dollar last year. Now, an interesting thing in this article is that Iran is blaming a technical fault at a pressure boosting station in Turkey. However, I saw this article today. Now, this is in the Daily Sabah. Take this with a grain of salt because this is basically a pro-government propaganda rag in Turkey. But they are saying local use, not a technical fault, reportedly behind Iran's gas halt to Turkey. A Turkish delegation dispatched this week to Iran after the country announced a temporary suspension in natural gas exports has reportedly found Tehran allocated the supplies for domestic use, contrary to claims that the technical failures were behind a sudden squeeze. Officials at Energy and Natural Resource Ministry and the state-run pipeline company BOTAS flew to Tehran this week on a mission to try to reverse the halt that Iran said would last 10 days, citing technical problems. So we've seen this theme playing out in the food industry so far this year. As prices rise, a lot of these governments are instituting export controls to try to keep their domestic prices down. And it looks like that may have been what happened here in Iran, that in order to keep their own domestic power prices lower and keep their own people happier, that they shut off the flow into Turkey to keep those local prices lower. And folks, we're seeing this play out again and again. The producing countries are hoarding supplies and the importing countries are left to fend for themselves. Now, folks, this will be very bad for Iran's currency crisis because those exports are necessary in order to keep the flow of foreign currency into the country alive. Products that are produced in Turkey are sold overseas for dollars or for euros, and then the government is using a lot of those dollars and euros to prop up their own currency. So now that they can't keep the power grid running and they're shutting down production, that's going to limit the flow of dollars and euros into the country. This is going to make the lira's crisis even worse. Now, I want to talk a minute about Turkey's KKM policy, and this is basically this government-run program where they are encouraging citizens to make time deposits into their banks for astronomically high interest rates, but the government is guaranteeing those lira deposits against any future declines against the dollar or the euro. So they're basically government-run CDs that have downside forex protection. Now, Turkey has been using this program to try to bolster the dollar. They're encouraging people to trade their euros and their dollars for lira and then lock up those liras for a couple of months, and they're paying very high interest rates in exchange for that. The problem is most of the people who have been using this program so far have only been depositing lira. They haven't been getting a lot of dollars or a lot of euros. And this is in Reuters dated yesterday. Turkey's steps to calm the lira crisis and bolster FX reserves. Responding to an exchange rate crisis and spiraling inflation, Turkey's government has implemented a series of measures during the past month to persuade savers, banks, and companies to hold more lira rather than foreign currency. Some analysts have described the laws and regulations as soft capital controls, and that's exactly what they are. They're trying to get the euros and the dollars away from their citizens so that they can dump them on the Forex market and buy Lira with it to prop up the value of the Lira. The Turkish authorities have also introduced a scheme to induce foreign currency holders to convert their funds to Lira. The new deposit accounts offer substantially higher interest rates and a guarantee backed by the central bank and treasury against potential exchange rate losses. Having spent billions of dollars supporting the Lira in the currency market, the central bank is desperately seeking to rebuild its net foreign reserves, which have dropped more than 60% from mid-December to just $7.5 billion. So they have spent over $10 billion propping up the Lira in the last month and a half or so. Now they're down to $7.5 billion. So they can't keep sustaining this Lira propping much longer. They need a new source of dollars and euros. And now that their exports are going to be hammered by this power outage and the industrial shutdown, it's going to be hard for them to get their hands on more dollars and more euros. So they're turning to their own citizens for it. The actions taken have steadied the Lira, which has recovered from a precipitous dive to 18.4 per dollar in December to hold a relatively tight range around 13.5 per dollar this month. Here are some of the main measures employed. The exchange rate protected deposit scheme. There are two ways by which individuals or companies can avail the scheme, known by its acronym, the KKM. They can either transfer Lira into bank accounts for which they'd be paid an interest rate 3 percentage points above the central bank's policy rate, currently set at 14%. So you can make a timed Lira deposit at 17% interest, plus they're offering downside protection if the Lira loses more value. And remember, right now, the Lira is losing 47% of its value annually right now. Now, what do we say on this channel when someone is promising you a risk-free 17% return?
Run away! Run away! Run away!
That's right, we run away. Now, the other facet of this KKM scheme is people can convert foreign currency holdings into Lira and place it in the deposit scheme, for which the banks have offered yields as high as 26%, though there is no maximum rate. Again, these have those downside protections. So the 26%, that is the base case. If the Lira loses more value against the dollar or the euro, then that 26% yield is going to be even higher. And what do we say when someone offers you a 26% risk-free return?
Run!
That's right, Dr. Sadler. We run. Funds have to be deposited for at least 3 months. Introduced in December 20th, the KKM scheme has drawn more than 200 billion Lira, or $14.7 billion, but little of that was converted from hard currencies as Ankara intended. The banks have gotten $14.7 billion out of this, but they're down to just $7.5 billion left, which means they have already dumped half of these newly gained dollars in the Forex market to prop up the Lira, and the Lira is still losing value. Folks, they're almost out of dollars. They need more. So what do they do next? The inducement to banks. And that's right, when government programs are so beneficial and so wonderful, what do they often do? They force you to participate in them. Banks that fail to convert at least 10% of all customers' dollars and euro deposits to Lira by April 15th face a penalty of 1.5% on those deposits. This government program is so great that they're going to fine you if you don't participate in it. Isn't that nice? General managers at state banks have called clients to encourage them to convert part of their FX savings into the deposit scheme, and bank employees have been given related performance targets. But wait, there's more. Tapping exporters' revenues. To help rebuild reserves, Turkish exporters have been instructed to sell 25% of their hard currency revenues to the central bank. So all of these Turkish companies that have to hold dollars and euros because they have to source raw materials in overseas markets, those companies are being forced to trade their dollars and their euros for Lira. Again, this is a government program that is so great that they are going to put a gun to your head and force you to participate in it. And again, these Turkish exporters are already getting clobbered by these power outages because the country just shut off the power to their factories. So not only can they not make their stuff to sell it on the overseas markets, but the dollars and euros that they need to buy their raw materials on those open markets are being taken away by the central bank and replaced with Lira that nobody wants. Again, this is a crash course in economic destruction, courtesy of President Erdogan and Erdoganomics. So long story short, folks, the Turkish economy is being absolutely brutalized by President Erdogan and his absolutely idiotic policy of lowering interest rates to fight inflation. And now the country's central bank is so desperate to prop up its currency that it's traded almost all of its dollars and all of its euros for Lira to artificially inflate the price of the Lira. Now they're out of dollars and they're out of euros, so they're forcing their citizens and their companies to trade their dollars and their euros for Lira. They're promising these ungodly high returns in exchange for those deposits. They have no way of paying those returns, especially if the Lira loses more value, other than, of course, printing money. And what's that going to do to the Lira losing its value? It's only going to accelerate it. And now the country is struggling to keep its power grid running, which is even killing those Turkish manufacturers and exporters even more because they can't run their factories. They won't have anything to sell in those overseas markets to bring in those dollars and to bring in those euros. So any way you look at it, Erdoganomics is absolutely crushing the Turkish economy right now. And again, rather than realize this isn't working, he just keeps firing his central bankers and replacing them with lackeys who do whatever he wants. Things are not going well for Turkey, folks, and I would not be surprised to see widespread social unrest very soon in that country. If I had to guess, I think President Erdogan probably has a private jet on standby to get out of that country in a hurry if he needs to. Guys, I want to thank you for your time. Thank you for watching this video. I hope you'll stay a while. Won't you consider subscribing to my channel? And while you're here, give me a thumbs up and don't forget that notification bell. It really helps me out. And until next time, live small and dream big.